Welcome to Pitprint by Portafolio Capital. I'm Mal Sanchez with your Monday recap of last week's markets and macro data. Let's dive in. Stocks broke lower on tariff shock headlines late in the week, with the S&P 500 down 2.4%, hitting a price of 65.52.51. Dow Jones down 2.7% for the week, and the Nasdaq down 2.5% for the week. Friday alone was the worst day since April for the S&P as tariff fears hit risk assets. Macro was dominated by tariff rhetoric and the U.S. government shutdown, which delayed key data and kept policy uncertainty high. Markets stayed hypersensitive to any hints on the Fed path amid the fog in the data. The official NFP report remains delayed due to the shutdown. Investors leaned on private indicators and headlines instead, keeping focus on near-term policy risks rather than fresh labor prints. Leadership flipped risk off into the week's end, with tech and growth selling off with the tape on Friday, while defensives held relatively better. The tariff shock overwhelmed the earlier risk on tonality in markets. Oil ended the week near 5-month lows after tariff escalations. Brent hitting a low price of $62.73 per barrel, WTI at $58.90 on Friday's close. Gold notched on 8 straight weekly gains, up roughly 2.7% for the week. Spot price at $39.89.49 an ounce on Friday's futures market. Bitcoin slumped late Friday to a price of $104,782. Risk assets sold off after hovering near record highs earlier in the week. This week kicks off big bank earnings and remains headline-driven, with Tuesday from JPMorgan, Goldman Sachs, Wells Fargo, and Citigroup reporting before the market opened. Wednesday, we have Bank of America and Morgan Stanley. Data releases may remain impacted by the shutdown, so the guidance and outlook from CFOs will carry extra weight on this round of information. That's your Pitprint for the week. I'm Mal Sanchez, and I'll see you next Monday for another pulse on the markets and the macro.